right, good morning, everybody. Today is October 24th, 2024. It's currently 6:37 a.m. Pacific Standard Time, 9:37 Eastern Standard Time. Right now, we're looking at the ES1 S&P 500 mini futures. Had a pretty good day trading yesterday. Right now, I'm looking. This is the 200 moving average right here. We can see price is below the 200 moving average, so that lets us know that we are still in a bearish trend. And as some of you guys may know, I like to look on my heat map. Okay, so I'll pull up the Yahoo Finance app and I'll look at stocks and kind of get a view of how things are being traded at this time right now. And it looks like it's pretty mixed right now. There's like a mixture of like some green, some in the red right now. There was some pretty major news that was coming out this morning. So we had the initial jobless claims, continuing jobless claims. Looks like it was a pretty good report. We got the Feds speaking later today, or it looks like they just got them speaking earlier today or whatever. May still be speaking, but here in about maybe 7 minutes or so, we got the S&P Global Composite PMI, S&P Global Manufacturing PMI, S&P Global Services PMI, and so this is all really huge news. New home sales. Okay, so this is all major news. This is like red card news. It's going to affect the market pretty strongly. So before I just hop into a trade, I wanted to make sure that I let the news kind of pass by, just so I can kind of get a picture. Because so if I go over here to this chart here, all right, and right now I'm on the 1 hour time frame, but if I let's go down to the 5 minute time frame, you see that price is oversold. So that means price is going to reject and probably come back up here to give us some breathing room here. 15 minute time frame, same difference. It's pretty oversold. All right. So we can expect price to probably bounce back up before it goes back down. And if it does decide to continue back downwards, so I've been kind of predicting this for a long time. Probably maybe a month, probably about a month or so. Okay, so if you look right here, there's a huge gap. There's a huge gap right here between 56.41 and up here towards 56.77 or so, roughly. Okay, so there's a huge gap in the market right around here, and what we're looking for is we're actually looking for price to come down somewhere right around here to 56.64, something like that, to kind of close that gap, kind of close this gap up or whatever, right? At this level right here, probably close up right around here, probably. Okay, it's kind of got to meet in that area to kind of close up and fill in this area that's not been filled up. But as you can see, we've had several days, including roughly about a month or so, that this gap has not been filled. If anything, price has been reaching all-time highs, ATH, several times throughout this month, this past month or so. So yeah, looks like the market is due for a reset eventually. You know, it's kind of funny. I know some people just don't understand how these things happen. I mean, historically, this is what happens during this time, during the season or whatever, because as the market is getting ready to reset and everything else, it's getting ready to go into the new year. So we're getting ready for the holiday season, all that holiday market sentiment or whatever. By the end of this year, the S&P is going to reach 6,000. It's going to come up here. So we can expect to see, I know it's probably kind of weird, but look, think about it like this. Right now it is October 24th, okay? So in about 2 weeks, we have election day, right? Historically, around election times or around election season or whatever, we can expect to see the market drop. So I'm expecting to see the market drop anyway around here, because we can see this huge gap right here. But I'm expecting to see the market start. You can see it declining now, but I'm expecting to see the market continue to decline up until election day or so. So when election day comes up, whatever, and you're going to see it's going to be like huge wicks. It's going to go, it's going to be jumping everywhere. And yeah, I mean, we'll just see it come down. And when it comes down and closes a gap or whatever, you'll see it begin to range. So it'll range, basically it'll stay within a certain area. Let's see, do I mean like a little, where my shapes at? 1 second here. Rectangle. All right. So we can expect to see price continue to probably like range this area right here. So price is going to drop down and then it's going to probably just range in this area for a little bit before it decides to come up. And when it comes up, it's going to come up and it's going to start shooting upwards. Boom, up here. And so there's going to be a lot of things that's factoring into it, besides the fact that we're in Q4 right now, and then we'll be entering into a new year, into 2025. Every new year, there's going to be a new agenda. There's going to be new plans, new things set in course. Businesses, government, education system, everything. So a lot of things are starting to reset. You know, it goes into a new year. These new plans that are going to be implemented. How finances and the budgets are going to be allocated and how they work and whatnot. So it's like all these different things to take into consideration. On how the market will be affected. All right, so like I said, just patience and persistence. I don't want to hop in right now because of the news. So I don't want to be foolish, and I wouldn't advise anybody to be foolish and like so anxious either. So when there is when you know there's such strong news getting ready to be released soon, probably in the next minute or so, you know, this is the time when you want to just wait. You want to wait. I could easily just hop in the market right now and press. Let's see what I do to my chart here. What the heck? I did something crazy in my chart, man. Anyway, I could easily hop in the market. I could press sell because I see that we're obviously in a downtrend right now. I can press sell right now. But like I mentioned before, like if I press anything right now, trying to hop in, being too anxious, being too antsy or whatever, as soon as I press sell, then go figure, the market's going to reverse and go upward on me. And that obviously wouldn't be good. Let me see if I can get this, my chart. I don't know what happened to my chart. I don't want 3 charts. It's too confusing. Here, I'll just close this. Boom. Okay. I don't know what the heck happened with that, but all right. So like I was trying to say, I think I got distracted by that. So I'm just waiting. Hopefully this is not too boring for you guys. Boom. You can see the news just hit, and now the market is reacting to it right now. Yeah, it's reacting to it right now. That's why you see it's dropping. 5801. Before I just hop in, I want to look for a better opportunity. So right now you can see that it's already really low, right? You can see that it's in oversold territory. I would not want to jump in right now. Like, and I could be wrong, but I'm pretty right about this. Like, it just looks good. Like, this is the part where you gotta have a strong psychology. You gotta have discipline. This is the thing. Like, I've just seen this happen so many times. We're looking at the market right now, and we can see price is dropping right now, right? Now, mind you, in the next 14 minutes, 13 minutes and some seconds, we're gonna get a new 4-hour candle. When that new 4-hour candle hit, price can go anywhere. Things can change. So before I just try to hop in so I can make me a quick like couple bucks or something like that, or lose a lot of money, I want to wait because I'm I know, like I'm pretty positive. I'm like about 85-90% positive that price is going to reverse. It's going to reject, okay, and it's going to come back up, probably about up here towards the 200 moving average, somewhere right around here. You can see it's already starting to reject right now. You see what I'm saying? Because it's already oversold. It's already oversold. That's on the 5-minute time frame. If we go out here to the 15-minute time frame, it's already oversold, right? So that means the price has to come back up. It has to come back up. So it has to come back up. and if it decides it wants to come back down, it'll come back down eventually, but it has to come back up. It has to come back up and retest that area, okay? So we're gonna have some patience and wait. Something I learned a long time ago, and we used to talk about this, is that not every trade is a good trade. I mean, you got to know when to get in and when not to get in. And so this is one of those moments right here where you know not to get in. So I'm going to say it again in case some of you guys missed that, that are new to this or whatever. This is the RSI, okay? The Relative Strength Index indicator, okay? This indicator is extremely powerful because it'll tell you if price is in overbought territory or if it's in oversold territory. And depending on which area it's at, so if it's way at the bottom, you know, it's going to have to come back up. If it's way at the top, it's going to have to come down. If that makes sense. That's, in my opinion, that's super simple terms. So basically, if it's at the bottom, you know, it's oversold, you know, price is going to buy up. If it's at the top and it's overbought, then price is going to sell down. Okay, and so you can see it's rejected a couple times here. It's rejected a couple times, and then not only did it reject, but it looks like it's kind of ranging in that area right now. Let's double check the Yahoo Finance app so we can see what the stocks are being traded at right now. So it looks like the S&P is up right now about about 1/10 of a point. Let's see, Amazon, Meta is up, Tesla's up. Looks like NASDAQ is up. The Dow Jones is kind of down right now. So Microsoft is down. So there is some big companies that are down. And so just like I kind of predicted yesterday, so McDonald's, for some of you guys that don't know, McDonald's stock dropped like a large amount the past 2 days or so due to a supposed E. coli breakout with one of their popular sandwiches. And so I thought that was kind of weird, but looks like McDonald's is kind of trying to make a comeback right now. They're kind of bouncing around between the red and the green, so we'll call them orange, I guess. What's red and green mixed together? Yeah, but a lot of the other companies are still in the red. You know, sometimes I like to go straight to the financial companies. If you go, like I go straight to the financial companies, Citigroup, Wells Fargo, Bank of America, Goldman Sachs, JP Morgan Chase, American Express, Visa. You know, I try to look at these guys and see how they're performing, and it looks like they're actually in the green. Citigroup and Chase is a little bit in the red. Amex is a little bit in the red. Visa is a little bit in the red as well also. So it's just a really mixed market right now. But here in about 9 minutes or so, when the new 4-hour candle hit, we can expect to see some movement in price. At least that's what I'm hoping for. Like I said, there's so much news that's being released today. Some red card news, some very important news. So we want to see. Okay, boom. Okay, so the S&P Global Manufacturing PMI, all three of those have come out, and it looks like they came out in the green. Kind of good. So we probably can expect to see price buy up. Okay. Let me show you guys a really cool indicator that I like to use. Okay. So there's two indicators I like to use that lets me know if we're in a bearish or if we're in a bullish trend. Okay. The 200 moving average, like I showed you guys here. Okay. It's just a line. You can literally just come up to your charts, And you can add a simple moving average, an exponential moving average. I like the EMA or the SMA. Both of those are really good, depending on what you are looking for. They work just about the same, but you go in there pretty much, and then when you configure them on the period, you put 200, all right, at the close, apply it, save it, and boom. Okay, so 200 moving average. So if price is below the 200 moving average, you're in a bearish trend. If price is above the 200 moving average, you're in a bullish trend. So i.e., if you're underneath the 200 moving average, look for sells. If you are below or above the 200 moving average, look for buys. Pretty simple, right? So same concept and same rules with this other indicator I like to use. My other indicator that I like to use, one of my favorites, is called the Ichimoku cloud, the Ichimoku Kinku Hayo cloud. Okay, so pretty same difference. Okay, if price is above the cloud, we're going to look for buys. We're in a bullish trend, and if price is below the cloud, we're going to look for sales. We're in a bearish trend. Okay, and I always like to do a top-down analysis. So you want to start at the daily time frame. All right. Start at the daily time frame, and you can see that price is starting to reject. You can see it's coming down on the daily time frame a couple of times, but price is above the cloud still. So it would say, okay, we are in a bullish, but you can see price is dropping. So let's come out to the 4-hour time frame, and boom, you see that it changes. So when price is in the cloud like this, normally one of the rules is you don't want to trade when price is in the cloud. Okay, there's too much uncertainty in the market. The market can go this way, that way. You don't want to get caught up in the cloud. Kind of imagine like if you ever driven through like fog, which is virtually almost kind of like a cloud, almost, you want to say. I don't think fog is a cloud. Don't anybody like fact check me on that. But basically, if you get the concept, it's like if you're driving through fog, you can't see. So same thing with the cloud. You know, if you're like, just imagine if you're flying through a cloud or whatever, driving through a cloud, you can't really see. You can't really see with all that, with everything there. So same difference, you know, it's like if price is in the cloud, you're going to get caught up in some stuff that you don't want to get caught up in. So you want to be careful. But so this is just top-down analysis. So we're not trading from the 4-hour time frame necessarily. So daily time frame to 4-hour, we come out to the 1-hour, and you can see that price is below the cloud on the 1-hour time frame, which is a very general good time frame to go off of. You're not too high, you're not too low, but you're like right in the center, and you can kind of get a good view of where price is headed. So we know that everything from the daily to the 4-hour, we can tell that we're in a bearish trend. So we're going to look for sales, of course. The 1-hour time frame has confirmed that. Since we're below the cloud, we can look for sell opportunities, right? But, you know, we want to look for like a quick move. You know what I'm saying? We don't need anything too big. I made a trade yesterday. I think it was probably like a 6-7 point move, and I still made over $200. Okay, $200. Compound that every day, 5 days a week. That's what, $1,000 in a week. After your broker takes their fees, you're probably still going to walk away with like $900 or so. Okay, so I mean, think about that. $900 a week. Think about that. $200 times that by 5. You traded 5 days a week. Even if you traded 4 days a week, still $800. But you do that after your broker takes their fee, would say $100. You still walk away with $900. $900 in 1 week. Imagine what you could do with that. Times that by 4 weeks. 4 weeks in a month. Boom. $3,600 in 1 month trading on the market. You know, I mean, that's life changing for some people. You know, I mean, you'll be able to pay your bills. You'll be able to go off and celebrate birthdays and holidays, because I know holiday season's coming up with Thanksgiving, Christmas. I mean, shoot, we got birthdays coming up. You know, so many people probably can't afford to pay their bills. You know, you want to keep the power and the heat on during this time and make sure you have some food, some warm food for your family and stuff. So, I mean, this money could be life-changing for some people. I'm not saying it's guaranteed for everybody, but you know, nothing's really guaranteed in life for anybody. But when you put in the work and you do some research, you practice this skill, you know, the possibilities are there. The opportunity is there. It's just on you. You know, to get up in the morning, do your market research, study the news, study the charts, you know, look at these indicators. You know, like me learning the indicator about the 200 moving average in the cloud, like it took me time to figure out what indicators do I like the most, which one tells me the things that I like to see, depending on my trade style, because everybody has their own trade style. You just got to find out what works for you. You know what I mean? You just got to find out what works for you. You know, everybody's different. You know, this is what I like to look for. I like to look for support and resistance levels. And I want to know, this is the thing that I used to want to know when I was younger, being a day trader. I was like, well, how do I know if I'm looking for a buy or if I'm looking for a sell? And so this is one of the ways right here, you know, easy. So now I know I'm looking for a sell opportunity. I'm like, okay, I'm not going to hop in any buys at all. I'm not going to buy in the market. It's like, why would I do that when I know that the market is selling down? Just got to look for the right opportunities, you know? So anyway, hopefully that blesses somebody, and hopefully somebody can learn from that. You know, like I truly believe like learning that, learning or understanding some of those indicators like that can be truly helpful and life-changing for some people. From there is just having patience and waiting for the right opportunity. So hopefully, see, it's crazy. The market hasn't really made any strong moves. I mean, it has moved, but it hasn't made any strong moves going up or down. Good thing I didn't hop in on anything. See, if I would have hopped in, I would have been stuck. I would have been stuck in a trade. But I know for some reason it's so weird how like if I hopped in the sell, let's say I hopped in the sell, right? And I click sell or whatever, right? Like if I did that, like it's so weird how this works. It's like the forex gods or the trade gods are like looking at you. They're like, oh, he hopped in the sell, huh? It's like, oh, we're gonna show him good. We're gonna show him real good. And then the market just reverse on you, and then next thing you know, you're like, dang, now you're stuck in like this drawdown. And you got to sit here and decide, should I take me a loss and then hop back in, or should I just like hold out? And I can't tell you, I've actually blown some accounts doing that before. Excuse me. I've actually blown some accounts doing that, holding. Like I ended up being like a negative $900 drawdown before. I swear to you not. I've been a $900 drawdown of my own money at that. Just mad, just sitting there, just mad. And I've blown some accounts, but you know, I can tell you that I have come back from like some really, really bad situations. Okay, we got the new 4-hour candle, and you can see it looks like price is starting to buy up. Okay, so I've come back from some really bad situations before, where I've been like negative like hundreds of dollars, not like 100 or you know a couple hundred here and there. I've been hundreds, like pretty much pushing the 1,000 range. Like I've been like negative 400, 500, negative 600, 900 before of my own real money too. And I'll just be sitting there like, and this is why I guess I can like smile now, because like I've learned how to take my emotions out of it. Not saying that those weren't stupid mistakes. But sometimes, I mean, the market, it does these things. And I think one of the reasons why also is because me personally, I don't like putting a stop loss. Stop loss is good for some things. It's good in many reasons. It's going to stop you from losing more money than you probably would have normally lost. It gives you discipline. It's good. Stop loss is good there. Don't let me tell you that it's bad. Me personally, I don't like stop loss because I don't like losing. Okay? Like if I'm trading, I'm willing to damn near lose it all. I lose money, I can make money again. I've been told like, oh, that sounds like gambling. You know what? You got gamble traders out there. Maybe I was like a gambling trader back then, but I've for the most part, I've come back from all of my negative drawdowns that I've been in, and that's one of the reasons why I like trading with a larger account. Because if you trade with a smaller account, your drawdown limits are gonna suck. You know, if you go to like negative like $500 in drawdown, you know, negative $250, $300 in drawdown, you know, your broker is probably gonna pull you out. You know, but I can afford to go negative like $900, $1,000 on this account. I wouldn't want to. I wouldn't recommend it, but I can afford to do that though, and pray to God that the market reverses and comes back in my direction. And one of the reasons why I was able to survive that is because of risk management. Like I never had like a huge lot size or too many contracts open at one time. If I did do that, I mean, my account would get blown just like that. You know, there'd be more than my account being taken out, or my broker taking me out. Like my account would be blown. So yeah, see, right now the market's buying up, and like I said, so this is all about having discipline. So it's like, even though we know that the market's going to buy up, we had this strong notion that the market's going to buy up. Like I said, it was an oversold territory. Now it's buying up. So I can get out of that oversold territory. Once it gets out of that, like it's probably going to hit this area of support right here at 58.58. And once it hits this area of support, we can probably see a range a little bit, and then it'll drop back down. Okay. But yeah, just because we know it's going to buy up doesn't mean that I enter into a buy. Just to get a couple points off of that, to me that's greedy and that's foolish. You know, you're risking your account, and you got to look at this like a business in a way. And you know, there's certain levels of risks involved in trading for sure, but it's on you. You know what I mean? It's on you. I mean, you take a risk of making the wrong move. You also take the risk of not doing anything at all. I mean, but shit, sometimes if you don't do anything, you don't really lose anything either. You didn't gain, but you didn't lose. So, you know, sometimes you're gonna have days like that where you probably just don't see a good move, and it's best just to, like, you know, not even hop in, just come back the next day. So that's what it's starting to look like right about now. Because if I don't see a good move coming up here within the next 20, 30 minutes or so, I'll probably just come back tomorrow for a trade. But we'll wait and see what happens. And, you know, I appreciate you guys hanging out with me. For those that are here, I know this is actually a pre-recorded, so I'm recording this live, and then I'm gonna launch it on YouTube or whatever. But I mean, it is live, but it's not live if I look like that. So I didn't press the live button. So and the reason why I do that is because I like to create content that other people can see, so that you know, if I make a mistake or if I did something good, whatever it may be, other people can come back to it later on in the future, and they can look at the videos and maybe find some kind of inspiration, motivation. Maybe you might learn something, or maybe you might have seen something based on, you know, I was doing and added to your own skill set. You know, I have a lot of friends that like my concept about the Ichimoku cloud and the 200 moving average. Just understanding that, they're like, okay, cool. If I know that price is above the cloud, I'm looking for buys. The price is below the cloud, I'm looking for sales. From there, they're like, okay, I'm going to use my other indicators. Another good indicator that, you know, a lot of people like to use, similar, the 20 moving average, the 50 moving average, and the 32 moving average. You put all three of those together, it kind of combines like what they call like the Cobra effect, or the Cobra, whatever. It looks like kind of like a snake or whatever. And so when the thing is, when the 20 moving average crosses below the 32 and the 50 moving average, you're going to see price move in a certain way, in certain directions. So if price drops, if the Cobra crosses those and price goes below those moving averages, then we can expect to see sales. If price crosses and price goes above those moving averages, we can expect to see buys. So, you know, just understanding those indicators, put it along with other strategies and whatnot, it can help you out. So here on TradingView, I'm only allowed 2 indicators at a time. So I like these support and resistance indicators. Super helpful. Save me some time of having to like go back and mark up all these boxes. I just kind of look at them just to verify that these are true. I like the TTM. Right. So yeah, the TTM squeeze is there. But if I go over here to my other chart, my other screen here, I've got the RSI, 200 moving average, Bollinger Bands. This was already on here. This is the volume indicator, whatever. I don't really use it too much, mainly because I don't know how to use it. It's just there. But yeah, these are the indicators I mainly use though. I like using the RSI, the 200 moving average. Bollinger Bands is good too. I like the Bollinger Bands channel. But I mainly use the cloud, moving averages, RSI. I like the TTM squeeze MACD indicator as well. Stochastic is good as well also. So yeah, let's look and see what works for you. Price is ranging today. We're not getting too much movement today. Yeah, market opened up about roughly 40 minutes ago. See, this is one 15-minute candle, so it's from 7 o'clock. Another one is from 6:45. So this is where market opened up. Market opened up and price dropped. I probably could have got in on that sell there, but I wanted to be safe. So it looks like I might have missed that opportunity. And since then, price has just kind of ranged in this area. And it's probably doing that right now because it looks like the Feds are still speaking. Let me just verify. Okay, and so it's just a bunch of news coming out right now. The new home sales has come out. Those are in the green. So there was actually a lot of good news that came out today. Strong news that came out today, but the news that came out that was strong, it came out. A lot of it came out in green. So yeah, there's a lot of green news. The jobs claims, everything else is really good. So we got a lot of good news. Let's see. I just look at the Yahoo Finance app and I like looking at the news on. So the Yahoo Finance app give me some news, but what I was looking at was this app called. Well, it is an app you can download on your phone, but I prefer to use the website just because it's more reliable in my opinion than the app. Not everybody updates their apps as much as they should. But if you go to fxstreet.com, so it's fxstreet.com. If you go there, and at the top, or if you click menu, there'll be a tab that says economic calendar. You want to get the economic calendar, okay? The economic calendar is going to show you all of the news that's coming out, and it'll even give you like a signal or a color next to it. So like on here, you probably can't see it too well, but on here it'll show you, okay, yellow, orange, dark orange, or red. So if it's red, you know that's super strong news. This type of news is going to affect the market really strongly. And if you even click on it, it'll tell you what it is and how it affects the market. So let me show you, what is the S&P Global Manufacturing PMI and how it affects the market. It says the S&P Global preliminary PMIs for October are likely to show little variation from the September final readings. The Federal Reserve will likely trim rates again in November, with PMIs having no significant impact on the decision. Financial markets revolve around the potential outcome of the U.S. presidential election. Euro USD is poised to extend to its decline. Okay, so the S&P Global Manufacturing Purchasing Managers Index, that's what PMI stands for, released on a monthly basis, is a leading indicator gauging business activity in the U.S. manufacturing sector. The data is derived from surveys of senior executives at private sector companies from the manufacturing sector. Survey responses reflect the change, if any, in the current month compared to the previous month, and can anticipate changing trends in official data series such as gross domestic product, GDP, industrial production, employment, and inflation. A reading above 50 indicates that the manufacturing economy is generally expanding, a bullish sign for the US dollar. Meanwhile, a reading below 50 signals that the activity in the manufacturing sector is generally declining, which is seen as bearish for the USD. So it looks like we got a reading today of 47.8. So it is below 50 by about like 2.5 points roughly. So that's why we can see, looks like that's why price is kind of lingering, I guess. That's one reason. Not to mention also, I did show you earlier, so when we looked at our top stocks here, you can see somewhere in the green and somewhere in the red. So we could tell that price is Price is ranging right now, and so with price ranging and everything else, we're probably not going to get too many good moves. I don't want to put my account at risk. I'm going to hang out here probably for like another 10 minutes or so, and then after that, if not, I'm going to go get me some breakfast and get to my other tasks for the day. I might come back later and see if I can find a move happening or so. If I see a move happening, if anything, like I said, price is in the oversold territory right now in the 15-minute time frame. I'm expecting price to come up here probably around like 58.61, 58.65 or so. If I see price come up, price is going to come up here, and then I expect to see price to come back and drop back down to around 58.42 or so. Okay, that is just my prediction. I could be wrong. Okay, so hopefully we can get some good news on that. Let me just type in my chat real quick. We got a ranging market. Strong. We didn't get too many strong moves. We can get possible moves later after Fed's speech, because right now the Federal Reserve, or the people that represent the Federal Reserve that are working there right now, it looks like there's one of the guys there is giving a speech. Looks like his last name is, what's this guy's name? Hammack, 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 Fed's Hammack, is giving a speech today about whatever he's giving a speech about. Yeah, I'm not too greedy. I'm not greedy at all. See, look at that, boom. It's going up, it's going down. It's not even really moving anywhere. It's moving between. So this price that went down to, this last candle price went down to 58.49, and now price is probably going to come back up to 58.52 probably. I guess literally just ranging this area. It's not going to anywhere. So anyway, so the lesson for today, I guess I would say, is basically not every trade is a good trade. You got to know when to get in, when not to get in. Make sure you're doing your research. Make sure you're doing your market research, your analysis. I can't stress that enough. I showed you guys how to do a top-down analysis when you start from the daily time frame. Okay. We can confirm where price is at by the daily time frame, the 4-hour time frame, the 1 hour, then work your way down 15-minute, 5-minute time frame, whatever, right? So you can find a good entry point. I've showed you guys the cloud. When price is above the cloud, we're looking for buys. When price is below the cloud, we're looking for sales. And the same rules apply with the 200 moving average. Okay, if price is below the 200 moving average, we're looking for sale opportunities. If price is above the 200 moving average, we're looking for buy opportunities. Okay, so we can see that price using the RSI, the relative strength index. Okay, it's going to be different on each time frame. Okay, so don't take that into consideration. Okay, if price is below this area right here, or is down here, we can see price is oversold. If it's oversold, that means price is going to buy back up eventually. If price is up here and it's at the top, it's overbought, then price is going to sell down. As you can see, it reached a spike right here at the top right here, and what did price do? It dropped. Okay, so trust the process. Okay, just got to look for the right opportunities. All right, and don't put yourself in a situation where you're going to risk your account. Okay, because you can always come back and trade later. But if you blew your account, dang, now you got to come up with the money again to get you a new account, or to refund your account, And so you don't want to do that, That's never fun, because then you're out the game until you can get that money back again. I'm pretty sure you guys might have heard this. It takes money to make money. Well, in this situation, it's the same difference. You got to invest. So you invest your money into an account, and you start trading. And, hopefully with your hard work and your dedication, you can find a good opportunity make you some money. Like I said, yesterday I only made $200 something or whatever. But like I said, imagine what that could be like every day. If you trade every day, you made that every day. That could be some good money and some life-changing money for some people. So anyways, hopefully you guys are doing good, doing well. Let me know what you guys think in the chat, in the comments below. Let me know what you guys think about the strategies I share with you guys. If you got something to add to it, let me know what you guys might have seen in the market today. I know I'm just looking at the S&P. If you look at NASDAQ, I mean, we can see it's pretty rangy. Also, we look at the Dow Jones. Looks like the Dow's just been dropping, but it's like it's kind of ranging too on the Dow Jones also. Gold looks like gold has dropped as well. Okay, so the gold is being traded against the US dollar. So if that means the US dollar is rising, that means that gold has been dropping. So let's go check out the DXY, the dollar index. Looks like the dollar index has been kind of ranging. It hasn't really been going up or going down too much. It's been kind of ranging, but you see the dollar sitting at 104.19 right now. Bitcoin. Let's see what oil is doing. Okay, oil prices are dropping a little bit. Okay, might save you a couple bucks. A couple of ducats at the pump. A little some. So you can see price. So pretty much all over the market, price looks like price has been dropping. Some of the markets have been kind of ranging. And like I said, not every trade is a good trade. Don't put your account at risk. Come back the next day. You know what I'm saying? What Pop say? He's like, but you live to fight another day. So same concept. Anyway, guys, I'm about to get to it and do what I gotta do. I'm doing some other projects today, loading up some YouTube videos, creating some new designs. Got to talk to a couple clients about some other stuff they're looking for. And yeah, guys, have a blessed and wonderful day. I'll see y'all next time. Peace.